Hi, I'm Tim Sustak, SVP Investments and Treasury with Mid-Atlantic Corporate, and this is the Economic Update for March 2016. Today, we'll take a look at the evolving turmoil in the markets and the chance for a rate move at the March FOMC meeting. Last month, we talked about the turmoil in the markets and how the positive outlook for 2016 had been tarnished based on global economic concerns and market volatility. Well, that outlook got a bit worse after our last video, but now appears to be improving a bit. It's no secret that the consumer in the U.S. has been shepherding the economic recovery, and recent data on the consumer has been good. Consumer spending for January rose a better than expected 0.5%, and personal incomes also rose a healthy 0.5%. These are the types of numbers you would hope to see given the strength in the labor market. We even had the Fed's preferred inflation measure, the PCE price index, show life for January. The headline number, which is still held back a bit by energy prices, came in at 1.3% year over year, but the real story was the core, which excludes food and energy. It rose 0.3% and came in at 1.7% year over year, sneaking up on the Fed's 2% goal. Couple this with oil prices that have rebounded a bit over the past few weeks and are around $35 a barrel, and the markets have taken notice, with the Dow rebounding and currently approaching about 17,000. The jobs report we received recently seems to help based on the headline, with payrolls adding 242,000 jobs, far beyond what was expected. However, the report also showed that wages only rose 2.2% year over year and that the average work week declined, both which are disappointing as they are no help in correcting the inflation picture and just muddy the future outlook for the markets and the Fed. A look at the March FOMC meeting after the break.
Managing your investment portfolio and making sure you follow the strict rules of bond accounting, it's a big job. Unless you use Aton's new bond accounting services. Aton has teamed up with Clearwater Analytics to provide a complete online solution to investment portfolio management. The platform is completely automated and streamlined to make bond accounting easy. It might just be the thing you need to take your portfolio from good to great. Email us today and get started.
Welcome back. A rate increase at the March FOMC meeting has long been forgotten about by the markets, and even with the uptick in sentiment as of late, the markets still only give it about a 6% chance. Further, the market only places about a 65% chance of a hike before the end of 2016. Obviously, these estimates ebb and flow with economic data, so their absolute levels are not really as important as where the estimates are versus where the Fed wants to be. Although the March meeting will probably not generate interest because of another rate hike, we will get a new set of economic estimates from the Fed, and it will be interesting to see how much the Fed dot plot of expected rate moves has changed since December. Most expect the dots to fall somewhat, suggesting a slower path of increases than the 4 increases suggested by the December plot. Given the dovish Fed speak as of late, that's a pretty good bet, and it will be interesting to see how the market's view of future rate increases syncs up with the Fed's. Hopefully that will give us a better indication of what impact the volatile first quarter thus far has had on the resolve of the Fed to implement further rate increases and the market's ability to gracefully accept them. That's the economic update for March. Let's take a look at this month's release dates for some of the more important economic statistics. We'll see you again next month for another look at the economy, and as always, thanks for watching Fine Action.